Hopefully you all have some wonderful plans for Memorial Day weekend where you get to go out, where we can be almost free. Not quite mask free, but we can get out now. It was kind of nice going to a restaurant today. I was over in Santa Cruz, and I don't know if I told you that I bought the Silver Spur restaurant over there, and then I leased it back out to a gentleman that runs it. He owns the business and runs the restaurant. And I went in, and it was actually inside seating, and it was great to feel that buzz and that energy again. I was so happy for him that the restaurant's open. So, okay, it looks like we are now on time, and there'll be a few more people joining us, but I want to honor you and thank you for showing up tonight. You are going to be in for such a treat with Christina. But before we get started with her, I just want to share a little bit about us and what we have going on. So as you know, this is SJREI, and we say it's where the deals happen. Ask me anything real estate. If you don't know my story, I've been in real estate for over 30 years. I've done just about every kind of real estate transaction possible. I think I was like thinking real estate was a buffet and I had to taste each thing. So it was fun. My specialty, or where I focus now, is development projects and rehabs. So I've got some local rehabs going on and some development projects. So I do have to put up the disclaimer just to let you know we are here for education and networking. We don't endorse, warrant, or guarantee any of the products, and we encourage you to do your own due diligence on anything and everything you invest in. So our goal, or our mission, is to provide you education, networking, and most importantly, inspiration, so that you can make profitable and wise decisions. Now, the reason we say where the deals happen is when we poll our audience, we found that over 78% of our regular attendees did business together. So if you're looking for other people who are out to make impact in their lives and your lives, this is the place to be. You may have seen an email that went out. I just wanted to share with you. I don't just host SJREI. I am an active real estate investor. And one of the opportunities that I have is in Saratoga. Now, this particular house is providing an opportunity for you to partner with us because we have 4 rehabs going on right now simultaneously. And so we are looking for private lender partners. This particular house is in a very nice neighborhood that allows the school district to choose either Cupertino or Saratoga. And the house is like a time capsule. Everything is like original. You can see the roof, you can see the lights here. And we were able to get in at a price before it went on the market. So we're in at a very decent price. And there's not a lot of work. It's just mostly updating. You know, this house has got the garden tub, which was typical of the 1960s. And it has a great fireplace that simply needs to be updated. My favorite is the avocado green kitchen stove, the sink. And it even has this wonderful pink phone that is like iconic. We're going to try and save the phone. Anyway, the purchase price of this, we're buying it for $2.75 million. And we anticipate selling it for $3.875 pretty easily in this marketplace. A house just down the street sold for $4.2. We don't have any issue. We don't think there's going to be an issue reaching those numbers. What we are doing is we're looking for equity. We need the down payment money in order to make the purchase by this week. And so we're suggesting that if you have $200,000 and that you want to participate with us, we will give you a great return. We're offering 10% annualized plus we'll share up to 3% of our profit with you. So if you invest $200,000, we'll share up to 3% of our profit with you, in addition to the 10% annualized. We do anticipate this to go on for about 6 months. We think it'll take 3 months to do the rehab, and 1 to 2 months to sell, get it closed. So just to show you what the numbers, and again, this is not a guarantee. Read that. It says this is not a guarantee. This is what we project. So if you were to invest 200,000, annualized would be 20,000, but if we only need it for 6 months, that'd be 10,000. Okay. We do project our profit to be about 500,000 on this property. So that means your share of the profit would be 15,000. So for 6 months of an investment, you would get 25,000. That's 12.5% for the 6 months. So if we annualize it, that's a 25% return for joining us in this joint venture. In addition, if you want to participate by stopping by every week, I'm going to host on-site walkthroughs so that you can see the progress of how we do our rehabs and kind of learn along with that. We do already have several commitments. We're looking for 300,000 more. So we've already got the 700 we need. We have 400, and we are looking for the remaining 300. You do need to be able to participate quickly. So if you're looking to do a self-directed IRA, but you still haven't moved your money, that might not work for you on this deal, but there are more deals. There's definitely more deals coming. So we anticipate the money going straight to escrow. It doesn't come to me. It goes straight into escrow. And if it could be there by Friday, because Monday is the holiday, we'll close on Tuesday or Wednesday, depending on the county. So that's just a sample of what we've got. If you're interested, you can text, call, or email. This is my personal information that I'm sharing with you. Okay. All right, so let me share another deal that we found. And this particular one, I hear a lot from people that say, oh, you can't do seller financing in California. Nobody's going to sell you a house seller financing. Everybody knows they can get top dollar, cash, multiple offers, right? So I just have to tell you, probably at least 4 of my deals this last year have all been seller financed. And we're talking to more people in even just this week that want to explore the seller financing. So this particular house, the left-hand side was the before, the right-hand side is the after. And you'll notice on the right-hand side that there's another unit behind. This particular house is actually 2 physical separate houses. It's like an ADU, except it has its own address. This was essentially a hoarder's house. It was pretty ugly. And we were able to get a seller carry for 2 years with the purchase price of $950,000. We have invested about $200,000 in cash. We did not have to put any money down. Just the work that we did on the house was the investment. And with the 2 addresses, so the back address right now, we have it out on Airbnb, and we're averaging about $4,000 or $5,000 a month. The front house, we were able to convert into 2 units. So it has an upstairs. We made a separate entrance to the upstairs and made that a 1-bedroom, 1-bath. And then the main floor is a 3-bedroom, 2-bath. So being able to rent all of those out, either extended stay, like furnished finders. You know, if you're not familiar, furnished finders is nurses who, or medical professionals who get contracts here in California. Well, it's nationwide. Okay. Medical professionals who get contract jobs, they come and they want to rent a place that's fully furnished for maybe 3 months. And they can pay a price that is a little less than Airbnb, but more than your monthly rent. And you know, when their contract is done, they're gone. So you're not working to try and get people out that aren't paying rent. It's great. Along with that is the Airbnb. So we do anticipate to see revenues around 14,000 a month. And my monthly mortgage on this for the seller carry is 5,000 a month. So these are things that you can do. People say you can't get cash flow in California. Well, you can get cash flow in California. You just have to be willing to do it differently. And you can get seller carry in California. So I just wanted to share that with you. If you're out looking to make a deal, sometimes there is that opportunity for you. So I thought I would share a little bit about the floor plans and what we did, just because not everybody understands that value can be added by just moving a wall or two. So I don't know if you can see this, but hopefully you can. On the left-hand side, you can see that the entry into the main house was like right in the middle of the main house. And when you walked in to the left, you had a bedroom and then another small bedroom. And those two bedrooms closed off the kitchen pretty much from the whole area. And then straight from the entry was like this keyhole area that you would walk through to either get to the bathroom or get to the bedroom in the back. It was very tight. It felt very small and dark. So what we did is we moved the door. If you go to the drawing on the right, we moved the door pretty much down to the edge. We took out the two small bedrooms that were there and opened it up. So now it's like an L shape for the living room to the kitchen. And then that hallway that we walked through before, we actually enclosed that and made a nice master bathroom. And from there, we created an entry into the bedroom. So that became a master suite there. And then in the lower level, we added a washer dryer. There was really nothing. You had to go outside for the washer dryer. So we reconfigured the bedrooms and did an indoor washer dryer. Upstairs on the left-hand side, the stairs in this house were only like 18 inches wide. So they were not really safe to go up and down. I think they were an afterthought. So we did expand the stairs to the 3 feet. That's customary. And, you know, when you first walked up the stairs, it was one big open room, living room, kitchen at the end, and bedroom, bathroom. There was no washer, no dryer, and it felt really dark the way it was laid out. So what we did is, you can see on the right-hand side, we opened up the bedroom to the living room, and that's where we put the kitchen. We have a sink, a stove, a refrigerator, and laundry. And then we left the bathroom where it was. We just reconfigured it, and then we put the bedroom where the kitchen was. And this particular layout is much more functional. It does provide the laundry, and it's more visually pleasing when we go up there. So just a couple pictures. This was the original bathroom on the left in our new bathroom. On the left-hand side, you'll see the funky kitchen, the way it was all boxed off. And now on the right-hand side, you can see how we opened up that L shape. So now it's nice, light, and airy. We're installing two-tone cabinets. And this is the back of the front house. And you can see upstairs, there's the patio door. That's going to be the entrance to the patio, or the entrance to that unit. It will have a deck that will come down, and that'll be how they get their separate entrance. And the picture on the right is the new kitchen upstairs with the window. So this particular property will be going on Airbnb starting June 1st. So yay. Good. All right, so that's what I have for you tonight. Just a reminder, this particular meeting was moved from our normal second Tuesday. So in just a short couple weeks, we'll be back again with Zach Childress. And Zach is going to talk about wholesaling real estate. This is one of the meetings you don't want to miss, because there is a lot of opportunity out in the marketplace for wholesaling right now. So that will be Tuesday, June 8th at 7 p.m. And Christina, are you there?
Here, okay, I'm here. Here I come.
All right.
And I actually literally just at the last second, I got the PowerPoint over from PDF. So we're ready to rock.
Awesome. So not only is Christina beautiful, but she is smart, intelligent, and driven. The principal with Postal Impact, and Postal Impact is like a white glove marketing consulting company. We're in a mastermind together, and she is like on it. She is the data queen. And when she talks about data, she gets all excited. You're going to see her light up. Now, coming from Silicon Valley, with all of us engineers here, we love data. We can't get enough data. We can sometimes get stuck into analysis paralysis because we love so much data. So I can't wait to hear what you have to share tonight. And let's all welcome Christina Krause. Yay!
Hey, and I'm just going to say this. Yes. Y'all are lucky that I actually have a PowerPoint presentation, which I will share, because otherwise I would make you turn your cameras on. Because if it's pushing 10:30 at night where I am, and if I gotta be on camera at 10:30 at night, so do all you. But yeah, that's okay. That's okay, because I have a PowerPoint presentation, so you don't gotta look at my face.
All right.
As we enter tomorrow on this call. And hopefully, guys, what Lori said is true. Like, I'm so stinking passionate about data. And we kind of fell into it accidentally years and years ago. But what I'm really hoping that I can prove out to you tonight is that if you will embrace data, and I know that I swear I'm going to try really hard not to like bore you to death with it. But what I find so exciting about it, and I'm not like a detail-oriented person. I'm not. If I showed you my personality profile, literally, I don't know if any of you follow that kind of stuff, but I am off the chart, like independent, don't want to follow the rules, just want to be around people all the time, and literally off the chart, nothing on detail and patience and that kind of thing. However, once you understand how predictable your business can be, if you will embrace it on any level, on the smallest of levels, how much better you can be and how much more excellent you can be when you're allowing data and actual fact to drive your decisions, there's no possible way that you cannot get jumping up and down excited about it. So if I do my job tonight, I am going to make you passionate about at least wanting to dip your toe in. To me, it's kind of like losing weight, right? Well, like if you look at the big thing of what you have to lose, you're going to get discouraged. You're not going to do it. But if you will make tiny, itsy bitsy little tweaks and changes, once you see the ultimate results and how massively it can impact your business and how well you do in your business, you'll get addicted. I promise you will get addicted. And then the next time I see you on a call, y'all are gonna have to put your cameras on and you're gonna have to get a little excited with me. But I will let you leave your cameras off tonight. Otherwise, I will be demanding that you put them on. I will start my PowerPoint presentation and I will allow you to leave those off. So let me share my screen. Got it. Okay, like Lori said, my company is Postal Impact. And most people know us as kind of a data-driven lead provider. We actually use data to pull lists, to pull target lists, to identify motivated sellers for our clients. And then pretty much everything that we do, guys, almost everything that we do, because we understand investors, we work with some of the top investors in the nation. We're under the hoods of some of the top investors in the nation. And when we work with people on a data level, we require that they use a CRM. If you don't know what that is, it's a kind of a software that allows you to keep track of everything. We require that they use it. We require that they give us access to it, and we require that they basically just give us complete insight into their business, because what we do is completely done for you. what we've recognized with most investors is that we each have kind of a genius zone. We each have something that we're really good at. And what our goal is to allow investors or clients to focus on what they're good at instead of getting caught up in the things that we're awful at. I'm horrible at follow through. Thank you, Eric. All right. So Postal Impact is a data. We essentially, most of what we do is done for you. And it's data driven. Okay. So really quickly, one of the things that we're most known for is we tend to pick, as a company, we tend to pick themes for the year. And we craft everything that we do around a theme, even as we're presenting. We kind of pick a theme. Some of the themes that we're really well known for is a statement that drove our company, I want to say about 3 years ago, which is scale to be better before scaling to be bigger. I got so tired of hearing people say, I want to scale, I want to scale, I want to scale. And my statement was always, guys, that's why it's precisely why you need data. I want you to scale too. Not only that, I want to scale with you. Like, I want to cross the finish line with you, but you have to get good at first you have to have a business, and then you have to be really good at what you're doing before you scale it, because why would you scale a mediocre process? It doesn't even make sense. Why would you rinse and repeat something that isn't working really well? You got to fix things, make sure they're working really well, and then let's take over the world together. I couldn't agree more. All right. Another quote that we're kind of known for is stabilization. It's along the same lines. Stabilization before disruption. I love anything that I do. Like when we're looking at opportunities and we're looking at products to build and things like that, to me, it's either going to be really disruptive and make a big splash and boom, or I'm not really interested in it. Like, I want it to be out of the box. In fact, I don't want it to be out of the box. I want it to freaking break the box. And if it doesn't break the box, then I feel like all I'm really doing is offering something that anybody else has offered. So when we create solutions, we try to create solutions that are like, no one has ever thought of. We like to be disruptive, but again, stabilization first and then disruption. Because most of us, I know you said you have a lot of engineers, but usually when I'm talking to business owners and entrepreneurs, 80% of us usually are the visionary, the head in the clouds kind of people that are just like, go, go, go. I want to build, I want to build, I want to build. And that's awesome. But my, charge is always, guys, finish chewing what's in your mouth before you take another bite of the sandwich. You've got to stabilize first, and then you get to be disruptive, right? Because we all want to keep starting new businesses, but the trap that we fall into is, sometimes we lose interest. And then we start a new business to help the one that we didn't pay attention to hobble along. And I'm telling you, I can prove it to you that the vast majority of the time, if you start anything new to keep something that you've not done well going, you're going to fail at the thing you start again too. Because again, mediocrity is poison. It's poison no matter what. And I believe that of every area of your life. I don't care if it's business. I don't care if it's relationship. The most successful people that I see are working towards excellence in every single area of their lives. And if they don't, I'm not saying you can't be successful, but I'm saying you can't be massively successful if you've got some area of your life that is out of order and you're not even attempting to be excellent at it. Hopefully that makes sense. Another statement that we are well known for is you can do anything, but you can't do everything. Again, the beauty of those of you who are here on the call, and I'm speaking straight to your soul. There's very little that most of us, if you put it in front of us, that we don't know and believe in our head that we could do. You compare me to somebody else, make me competitive with somebody who is on the same level that I am. I'm telling you right now, I genuinely know that I can keep up and I can do anything, right? But what I can't do is everything. I need to understand my limit, that not only can I not do everything, I'm not built to want to do everything. We all have that thing that we're really drawn to and that we're really freaking good at. And I'm not quite sure why we get caught in this trap of knowing, like, you kind of have to embrace the fact that, because I think we always look at what other people are doing and say, I could do that better, let me do it myself. Yes, you probably could do that better if you went apples to apples for about 2 weeks, because I can crush anybody for about 2 weeks. And after 2 weeks, I'm like, this sucks, I'm out. And then you whiff on it. You know what I mean? So just trust yourself. You're not broken, you're brilliance, but you need to stay in your level of brilliance, right? So for this year, and what I want to talk to you guys about tonight, this year, our theme for our company is ask better questions, right? So it's really important to ask better questions. But most of the time we stop asking questions once we get the answer that we think that we want. And I very, very rarely, guys, share anything personal. I just don't. That's not because I'm not private, but I very rarely share personal things when I present, more because one of my own speaking kind of guides and mentors always says, like, why do people care? Don't put something in your presentation. Sean McCloskey says this all the time, like, constantly ask yourself, why do people care? So sometimes I do wonder, like, when people are doing presentations and they're sharing a lot of personal information, it's not that it's not compelling, but what difference does it make, right? I'm going to break one of my rules, guys. I'm going to talk a little bit about my personal life, and I promise you I'm going to land this plane. I'm doing this because I want you to understand how important it is to ask better questions in order for you guys to take your businesses to the next level. Okay. So these are my babies. This is my fam. These are the Krause kids. I have 2 girls, and I'm a single mom. Have been for quite some time. My daughters just turned 16 and 18 years old. I think we've all just kind of raised each other, because let's face it, you could probably tell I'm just a child. Like, I swear, I was just saying, I wake up every day waiting to feel like an actual adult. And now that I have one, I'm going, I don't even know how I got through raising these adult children, basically adult children. I barely even remember it myself. But I do feel fortunate that I have. This one is my youngest, believe it or not. I freaking love this picture. I don't know can you guys see my pointer, or if I point to things? Okay. So this cracks me up. This is my 16-year-old, and she only just turned 16. This is my youngest. So clearly her dad is a whole heck of a lot taller than I am. I always tell, whenever people meet me, they're often like, I'm only 5 feet tall. So a lot of times people are like, oh my gosh, I had no idea you were so short. I'm like, dude, I'm strategic about everything I do. Like, this gives me like 2-3 inches. I'm normally in heels. Tonight I'm in house slippers. So I don't have heels on tonight, but normally I'm like, I got 3 to 4 inches on my feet. I got 7 to 8 inches on my hair, and it's very strategic. I got to be able to, feel like I can keep up with people. But my daughter makes it very obvious how short I actually am. This one is my, she's a freaking beast. She literally just ran in 3 separate events. This just happened this past Saturday. And these are actually pictures from last year when they had the pen relays. She was invited. And actually that was, now that I think about it, that was actually 2 years ago. She was invited as an 8th grader to run in the pen relays with a 4x200 team. And it was just a big honor for her to be able to do that. She just ran at 16 in the state finals, and she qualified in the state finals for 3 events. And she's so passionate about it. It just blows my mind. They practice every single day. They do all this stuff. She has always gone to private school. But to be honest with you, like, her school is not super focused on track. And so in my mind, when she, shows all of this passion and natural acumen at running, I, just assumed that she would want every single opportunity to be better presented to her. And I proceeded for, I want to say 2 or 3 months to entertain conversations with private coaches, entertain conversations from other local private schools that have more of a presence in track and field. Ella and I would have conversations, Like we were having conversations, and I was asking her about how passionate she was and how serious she was about it. And she was making it very clear by her actions and her words that this was something that she was very, very serious about. And I literally got her, essentially accepted into one of the really well-known schools in the area for track. And I was talking to her one night on the way home, and I said, hey, Elle, I'm going to set up a meeting because I was able to get, and I talked to her about the school, whatever. I was able to get you, a meeting here, to see if that you might want to attend your 11th and 12th grade years at this school. You're going to be running with better runners that are going to push you even further. And she was like, Mom, I don't want to leave St. E's. I want to stay at St. E's. I was like, what? What are you talking about? We've been talking about this. I've been asking you how passionate, how committed you are about this. I've talked to private coaches. It's not like I was doing this all by myself, Elle. I was asking questions. I was involving you, and I was asking you questions. I'll never forget. And by the way, this coincides with what happened with my oldest. And she said, Mom, you never asked me if I loved running so much that I wanted to change schools. And I was like, okay, but Elle, like we talked about the fact that if you go here, you'll have a better chance at getting into a different kind of college, and that has a track program and things like that. She said, Mom, I don't even know that I want to run when I'm in college. She said, I want to focus on getting my psychology degree. And I was like, really? And I was so blown away by this. We talk all the time. We have a really good relationship. And I realized I was asking questions, but then I was stopping when I heard the answer in my head that I thought. Not only was I doing that, but I was pursuing things that didn't even serve the very person I was trying to show up for. So, she said, Mom, I don't even care. I said, well, okay. So now I'm trying to convince her, right? Like, this is in your best interest if this is what you want to do. And even if you want to go to college, it's better for you to get in, get in a good college if you've got your track and all this stuff. And she said, Mom, I don't even care if I don't need to go to the premier college for psychology. It's not important to me. She said, I need to go where I'm comfortable. I need to go where I feel like I'm at home. Otherwise, it's not going to matter because I'm going to be uncomfortable and I'm not going to be able to do my best. I'm not going to run my best. I'm not going to study my best. Again, I never even asked. I was asking questions, but I wasn't asking better questions. I was making assumptions based on asking questions up until a point, right? So, I just, it kind of hit me that here I have this theme for my business and my children are teaching me how important it is, that we're doing that. This is my oldest, knucklehead. Yeah. She's had a really, really, really rough year. This was her senior year. We literally only just found out yesterday that we had been able to get enough done to get her high school diploma. She's very, very smart. Kid is a beast. Kid's amazing. She taught me a lesson when I think she was 12. I don't know if you guys know, before TikTok, if any of you guys know, it was like Musical.ly before it was TikTok. And I'll never forget, I think she was 12 or 13 when it came out. And she had only been on the platform for a couple of months and, had, I don't know, 24 likes or, whatever the typical 12 or 13-year-old has. Maybe she would get 200 if something really took off or whatever. And she told me, Mom, I want to get 1 million. I want to get 1 million hearts. I want to get 1 million likes. And y'all, I was like, oh heck, what am I going to say to this kid? She can't get 1 million likes. I mean, at the time, it wasn't even like TikTok. I mean, this was just kind of new. There weren't a lot of people on the platform and I had to bite my tongue. But I was just saying, okay, Lex, that's going to be really hard, but I got you. I'll back you up. If you're serious about this. And me and my entrepreneurial brain, I was like, okay, you're going to need camera equipment. You're going to need this. I'm willing to do it. You show me how serious you are. How are you going to get this done? What are we going to do? And she's like, no, I just want to get 1 million likes. I was like, okay, I'm trying to insert like, realism into this thing without breaking and crushing her soul. And I will never forget, I was at a mastermind about 3 weeks later. That kid was just like, no, I'm going to do it. I don't need you to buy me anything. I don't want it to not be fun. 3 weeks later, that kid had done a video, and she's massively insecure. She actually is like me in that way. Like, sometimes you wouldn't know it to see her, but she just faces a lot of demons, like a lot of self-doubt demons. And the video that went viral, she actually did something I didn't even know that she could do. It didn't even involve her doing anything or dancing around. She just kind of spliced all of this stuff together, and it went viral, and she hit 1 million likes, and that kid dropped the mic and was like, done. Didn't even stay on the platform. I was like, oh, now we can monetize this. And I'm like, oh, look at all these things you could do. She was like, no, I just wanted to get 1 million likes. And then it was over. She's so stinking capable. That taught me a huge lesson too, guys. We decide. Nobody tells us jack. No, there's no limitation outside of our own just legit belief. And I said this to somebody. Believing or knowing you can do something, it's very different than having the balls to actually show up and do it and actually give it a whirl. Just do it. Just do it. If you genuinely believe and know that you can do it, then you need to do it. Pull the trigger, do it. And just watch, the craziest things happen. That said, this one has had probably the toughest year of her life. I literally shut my life down just this past year for October, November, December. We went out of state. I took her out of state to get intensive outpatient therapy in a completely different state. We literally just upped and moved for 3 months. These pictures on the right are actually some of the pictures we were when they were there. That's how talented that kid is. That kid has had no training. We literally went to Kmart, got some toilet paper and stuff like that, and she just put that makeup on my face. She literally just made that up. She's never had any training. She she has all that stuff, but then she also has all that self-doubt that certainly I have, that I know probably a lot of you have. Like, she's so capable, but then she also just doubts herself, and it's been really painful to watch as a mom. It's painful to watch your kids not be able to do what they're capable of doing. And we came back, we were still struggling. It was right around Christmas time and all. I'm just frustrated with her. She and I are locking heads, and, she's always, I'm shutting down my life to kind of try to show up. And she's telling me, you don't even love me. It's the typical teenager kind of stuff. But, I kept going, like, how could you possibly say this? I'm showing you that I'm prioritizing you. I'm doing whatever I can do. And I will never forget. And again, this all happened right around the same time, and it's all about asking better questions. And I'm sitting there just kind of like, what are we going to do? How are we going to get her through high school? How is she going to survive this? Because she couldn't get past this thing in her head that, she didn't have value and people didn't care about her and didn't love her. And I realized that I never said to her, like, I was showing up. I kept showing up in the way that I felt she needed me to show up, and I said, Alexis, what do I need to do? What can I do? Tell me what I can do that shows you how much I love you. And she legit sat and thought about it. I thought I was going to get a weird answer, and I didn't. She sat and she thought about it, and she said, you don't light up when I walk in the room anymore. And I remember when they were kids, Toni Morrison's one of my favorite authors. and I heard her speak. I'm not a super warm, fuzzy person. I just never have been. I'm kind of aggressive and blunt and to the point. I was always like, if my kids were like, is this a good picture? I was never going to be the parent that was like, it's the most beautiful picture I've ever seen. I would be like, I mean, it's okay, but I think you can do better. I was one of those awful parents. But I heard Toni Morrison say once, the best gift you can give your kids is to make sure that every single time they walk in the room that you light up. And I remember doing that when they were younger. And I remember intentionally sometimes not doing it when they were older because I felt like when I lit up, it gave them permission to misbehave. It was almost like I needed to make sure that they knew, hey, I love you. I'm still here for you, but we got a problem. And instead of just asking her, hey, Lex, if you think I don't love you, I don't understand, what can I do? I didn't ask a better question. And that was all. And at the end of the day, she could have told me, I want you to paint my pinky pink, and that would show me you love me. And all I had to do was ask. But at some point, I stopped trusting her and her ability to make a call and her ability to know. And I had evidence to suggest, honestly, that she couldn't figure it out for herself. So I stopped asking her questions and I just started trying to figure it out for her instead of asking, right? And I felt like that really taught me something. I promise you I'm going to land this plane. I'm going to make this about business. I'm going to land this plane. Okay. So I said that really to kind of get your mindset into this position of asking better questions, right? And how do you do that from a business standpoint? How do you make sure that you ask questions? Because I want to lead you down the path of asking questions. And some of them are going to be questions that you would intuitively ask, but then you have to train your brain to keep asking questions. And not just until you get the answer that you want, right? So I'll start first by just kind of showing you how squirrel-like we look sometimes when people say to us, what's your core what's your product, right? So we've already talked about the fact that we pull leads based on data. And we are a data analytics company. And what we do is we use that data. We're very unique in the way that we pull leads and the way that we handle marketing for our clients, because as far as I know, we are the only done for you company that also tracks people's sales data all the way through their sales pipeline. So we don't just look at like, what is the response rate and what is the net lead rate, right? We also look at what's the appointment booking rate on these leads, what's converting. Should you send a letter or should you send a postcard? So again, constantly, asking better questions. And that allows us to sell motivated seller lists. We have a call setting floor because we recognized by studying sales pipeline data that people are horrible at answering their phone. So we created a floor of setters, people who will answer the phone and set the call up for people. We do consulting. We do a lot of business development work. We have another company called Virtual Lead Managers. Once we recognized the fact that people were horrible about following up on their leads or nurturing or auditing their leads, we pre-screen and pre-train VAs how to nurture and audit leads through the sales pipeline, how to follow up on leads to shake out all the opportunities that you've got. We have a done-for-you alternative asset product with Tim Bratz for multifam. We have tech, we do SaaS. So it looks like we're kind of all over the place, right? And if you say, kind of what's your core product to us, what we realized is that our product is our client, right? And what we do is we ask ourselves, it's not just like, hey, what's your avatar? It's once we determine who our client is, then the better question for us to ask is what is their pain? And that is how we determine the services that we're going to create. What's the next thing that we're going to do? We take a look at our clients, at investors across the nation, and we say, what's the common pain points? And let's face it, guys, I don't care whether you're a beginner investor or you're, one of our, you're like some of our bigger clients who are, marketing all across the entire nation, like literally, like virtually marketing, spending hundreds of thousands of dollars a month, marketing across the nation. Pain points are common, like same pain points for somebody who's beginning and somebody at the end. Same exact pain points, because we're all basically the same person. There's nothing, Natalie and Eric and Sean, you guys that are on the call, there's nothing different about you and your acumen than the guys who are running billion-dollar companies that we run marketing for. You guys are the same person. You have the same ability. You're just at a different point, in your business career. And so asking better questions is what allows us to decide what our products are going to be. But at the end of the day, we don't have a core product. At the end of the day, we're a data company. Data drives absolutely everything that we do. We use data to determine what the pain of our client is, and then we create solutions around them, okay, by asking better questions. So I want to crystallize this for you in marketing, because I really want to focus on marketing. I mean, we're a marketing company, and that's probably the biggest pain point for people, I think, whether you're a small or a big investor, is marketing. What do you need to do? So I want to give you an example of how you can look at what you're doing and ask better questions to get better at your business. So this is an example, and this is an actual example of an actual campaign, okay, that I'm going to show you. And I want to walk you through a little bit, again, to train your brain to ask better questions. So if in fact you were going to say, guys, what is more effective? Are letters or postcards more effective if you're going to direct mail it? And by the way, let me first also say, I really would challenge anybody, and I want to save some space at the end for Q&A. You guys can ask me anything you want about direct mail or anything about marketing or the sales pipe, anything you want. I'm an open book on this stuff. But you're really going to set me off if you say direct mail is dead, because I'm telling you right now, there is no other marketing method in history that stands the test of time like direct mail does. It is consistent. It might not be consistent in a moment, okay, but over time, even when you factor in these massive disruptive things that have happened, like COVID or like the crash or any of those things, those are blips for sure. But over time, direct mail, hands down, is going to give you the best return for your marketing dollars. The problem is that you have to be consistent with it in order for it to work optimally. Okay, but let's look at letters versus postcards. So the way that we would do, a split test is to take leads, and this first line that says PI stressed, this is our distressed lead. We have our unique lead. The lead that's proprietary to us is like a financially distressed lead. We study factors that would indicate that somebody is financially distressed. And pretty much all of the lists that we pull for clients have some level of financial distress associated with them, layered on top of it. We layer a lot of different things on top, but financial distress is the primary indicator that somebody is going to be a distressed, motivated home seller, right? This first line is PR, that represents premium. So that is a letter. Okay, this bottom one is standard. It's ST in our world stands for a postcard. It's a standard mailer. Okay, we mail the same number of pieces. Let me move my screen up this way. We mail the same number of pieces. Okay, so these are mail pieces sent. This was about 5,000 pieces each, right? You look at and we look at total calls. We looked at opt-outs. By the way, guys, opt-outs. I don't care about response. I do care about response rate, but I care way more about net lead rate than I do response rate. Because to me, a very, very high response rate that doesn't actually result in opportunities to buy is the worst case scenario, because it's just a waste of your time. So again, ask better question, right? Like everybody says, what's the response rate? What's the response rate? That's a good question, but a better question is, what is the net lead rate from your response rate? Okay, so total calls would represent a response rate. That's how many calls came in from these mail pieces that were sent. Opt-outs, okay, so it's total calls minus opt-outs, and that gets you total leads, which is your net leads. All right, I want to challenge you guys here. I'm going to challenge you as we go, and I'm going to put sticking points where some of you guys are missing opportunities. Opt-outs should be, when you call a lead dead, that's an opt-out, a dead lead. I'm not going to do anything more with this lead. That should be somebody who says, take me off your list. Don't ever call me again. I hate your freaking guts. Okay. That's an opt-out. That's a true dead lead, right? Or somebody that says, I don't even own a home. Like, I have no idea what you're talking about. I have no home. There's just nothing here. There's nothing, I don't even have a home, okay? Anybody else, including the people who own a home but say, I'm not interested in selling, that is a net lead. That is a net lead. I'm telling you, when we did a 3-year study of our clients' data, we just did another one. What we found out was that of the clients who had a good follow-up system in place, like a good, elegant follow-up system in place, 74% of their deals that they did came in follow-up 30 or more days after the first point of contact from a motivated seller. Okay. It was not the quick one that somebody goes, yep, I want to sell today, get it under contract as quickly as you can. Those are great opportunities, right? But of the clients that did not do any follow-up, just only took the low-hanging fruit, only 8% of their deals came in follow-up 30 or more days after. So if you're not following up on your leads, if you are not making sure that you handle yourself properly with every single opportunity that is presented to you, then you're not worthy of the opportunity, frankly. Like, you have to respect what's being put in front of you. You've paid for it. Keep going, keep asking, keep following up, wait until they're ready. They're going to be ready at some point. Okay. So the first question is, what's the response rate? The better question is, what's the net lead rate? And by the way, guys, when I hear people say these leads suck, you can know that your list is suspect when at least 50% of the calls that you receive are not net leads. Does that make sense? Is everybody following this? If you have a question, make sure you let me know. I'm happy to stop anywhere that somebody has a question. If at least 50% of the calls that you are receiving are not net leads, if more than 50% are opt-outs, you should start questioning the list, the integrity of the list that you are pulling. Other than that, you are being presented with a good number of opportunities, and if you're not getting, like, if you're not getting deals, then you need to start questioning your ability to convert versus blaming the lead. Okay. And there are situations sometimes when the list is bad. So I'm not suggesting that that's never the case. I'm just saying more people use that as an excuse than should. Okay. So if we are, again, studying the effectiveness of letters versus postcards, right? Then if I tell you that a letter costs about 3.5 to 4 times more than a postcard does to send, then what would you say needs to happen in order for it to make it worthwhile for you to send a letter versus a postcard? Okay. Because I can't see you and I can't interact with you guys, I'm going to answer the way that I know you would very likely answer, because most of us would intuitively say, we need to see at least 3.5, 4 times more deals or opportunities coming from letters. Otherwise, just mail a postcard, right? I mean, that makes sense, right? Again, so if you look at this and you say, man, this cost me this letter campaign cost me 3.5 times more, and I got a 1.37% response rate with the letter, or net response rate, and a 0.86 with the postcard. These metrics is why most people end up mailing postcards and not letters. Okay. What's a better question than that? Ask a better question, right? Because here's what you need to look at. When we looked at these campaigns, look at this is appointments. This column represents appointments booked, okay, based on the calls that were received. 22 appointments were booked versus 7 appointments with the postcards. Now look at this. 3 deals to 1 deal. 3 deals on the letters versus, and this is actual, we did not make this up. Okay, this is from an actual campaign. And it's representative, by the way. It's representative of the whole, okay? 3 deals closed to 1 deal closed. Do you feel any differently now about letters versus postcards because you asked a better question? What's an even better question? How profitable are the deals that you're getting from letters versus postcards? And again, what we see here at the end is very representative of the whole. When I take millions of points of data, not just 5,000 and 5,000, when I take all the data that we have represented with our clients, this is very representative of the whole, okay? I just don't want to put up numbers that are ridiculously huge. In this instance, on this campaign, the profit per deal on the deals that came from letters was $18,235. The profit from the postcard deal was $15,177. And this was average, okay? This was an average profit per deal. Also, again, very representative. By and large, deals from letters tend to be more lucrative, tend to make more money, usually by somewhere in the $3,000 to $4,000 range. Those opportunities tend to be more plentiful. And what we believe is that there's a couple of things. Just because somebody, you can't even use the assumption anymore that, well, I have to now send 4 postcards to 1 letter, because the person who answered the letter is never going to answer they will, but there is a segment of the people who are receiving the letters from you that are never going to answer a postcard ever. I don't care whether it's the 4th or the 100th postcard. That's not the message that's not the channel that is going to get their attention. A letter is going to get their attention. Furthermore, because so few people send letters, they tend to be more lucrative because those people they're not exposed to how competitive everything is. You know, they're just getting these postcards and they're not paying attention to them. They're only responding to the letter. So you find that you have a whole lot less competition with letters also versus postcards. Does that make sense? Does anybody have any questions on that before I move on to a bigger data set? Anybody? Okay. So don't get your eyes crossed here. I've highlighted this. I just want to give you an example, first of all, of like a full tracker. We are a very specialty lead driven list company. So, you know, we're going to do like all the specialty lead lists plus our own, kind of proprietary list, right? And then we track every single lead type, every single one separately. Everything gets a different phone number. We track all of the things separately. Our model, when we do a data study model, we normally pull an initial list of 25,000 targets for our clients. And then we mail that list 3 times, okay, back to back to back, usually within the space, hopefully in the space of 1 month, we're mailing 25,000 targets in a county for a client, okay? As people are responding, and guys, I'm telling you this, please listen, because you can do this yourself with your own marketing. I'm telling you how we do what we do. I'm holding nothing back. I'm telling you to do it. So as people are responding, okay, we're stalking the people who are responding and raising their hand and saying, yeah, I potentially have a home to sell. And what we're doing is we're looking for the common characteristics of motivated home sellers. We're looking at the common characteristics of the person, of their home, of their circumstances. Because what we're trying to do is we're trying to identify, you know, what are the common characteristics, so that now when we pull our next list, we can target those characteristics, right? So we're looking at the people who are responding. We're looking at the people who are booking appointments. We're looking at the deals that are closing. We're studying those things. We're trying to find the pattern recognition that we need to find. We're trying to find those common characteristics, okay? And after 3 months of doing that and studying people, we can pretty much go, here's the 20 to 30% of your list where 70 to 80% of your yield is coming from. Let's eliminate the stuff that's not the most lucrative stuff. If I could tell you that 76% of your deals came from people who are over the age of 68 years old, if I could tell you that individually, then why on earth would you ever mail to somebody under the age of 68 ever again, right? That makes sense, right? Like if 76% of your deals are closed by this person, you can eliminate an entire segment and save yourself so much money. Okay, so that's what we're doing. I don't want to keep mailing 25,000 targets. I want to find out what's the highest value portion of this list. And then I want to duplicate those characteristics. I want to filter my leads based on the characteristics that I find. Again, let's go back to asking better questions. This down here, look at this red piece down here. This is representative of obviously a 25,000 target list. So we mailed all of this within a month, okay? mailed out 25,000 total pieces, 0.89% response rate, which by the way is rock star. Please do not listen to people who are like, you got to have a, 5, 6, 7% response rate. Guys, the average response rate nationwide always is and probably always will be somewhere between 0.48 and 0.49%. That's the right average. Okay, because when somebody says to you, I'm getting 3% response rate, I'm not saying it's not possible. Okay, but again, you need to ask better questions. You're getting a 3% response rate on how many pieces? Oh, I sent out 1,000. Okay, that makes a little bit more sense because sometimes you can mail out a fire list and get a fire response, but that's not sustainable over time. Okay, so again, how many pieces did you mail? How many times did you mail it? Oh, just once. Okay, so your 3% means nothing to me. And I see people making these massive decisions about their companies based on these little data points that people throw out, and they're not asking better questions. So if somebody asked you, what should your response rate be? You have to know at what you're comparing to. I'm not saying that there are not places in the nation where the response rate can be 1%. It might be in some of the tertiary or ancillary counties, the response rate does tend to be higher. Okay, but those of you in California, I'm telling you right now, by and large, the response rate on a mail campaign in California is probably going to be somewhere between 0.2 and 0.3% in California. Okay, again, I'm not suggesting that it cannot be different. But I am saying that if you take a lot of data and enough that you're actually able to use data because it hits the law of averages. By and large, if you're getting a 0.2 to 0.3% or somewhere around there, if you're doing direct mail in California, you're doing pretty good. Doing pretty good. Okay. So this is a really good response rate, right? This person had 47 appointments booked from the 25,000 mail pieces sent, 6 deals. So they were sending about 4,200 pieces of mail per deal. What do you guys think by and large about that campaign? 25,000 mail pieces sent, 6 deals. I'm going to tell you right now, that's really good. It's good. That's a great campaign. And that's, again, where most people stop. They go, perfect. This is great. Let's keep doing this. And by the way, this gets better if you're studying data, right? But I'm going to show you why, because you need to ask a better question. So it's not just like, hey, how's my campaign doing? Because if you stopped asking questions there, this campaign looks great. You can keep mailing it and you're going to keep making money. You're not going to lose money. You're going to make money. In fact, you're going to make a lot of money. I don't know what your average, I mean, I know in California, the deals tend to be, the margins tend to be pretty big, but let's call it $20,000. Let's just say the margin is $20,000. 6 times 20,000 ain't so bad, especially when you only send 25,000 pieces out, right? Ask a better question. If you will separate out the leads that you're mailing, okay, and you will compare the results. So you're looking at the response rate, probate letters, we were at 2.33%. The probate or the stressed letters, 1.37, and so on and so forth, right? But what can you identify if you break your list out? You can identify, right, what's not performing. So you can make a rock star list even better by identifying the things that aren't performing over time. You got to give it a second. Do not do this too fast. Okay. If this was the first drip that we sent out and this was the result, you got to do it a couple more times before you can trust your numbers. Okay. Don't give up easily. Don't look at data too quick. You got to be responsible with data, right? But if we do this and we keep doing this, it will become very apparent just by these metrics alone and how you're booking appointments. It will become very apparent where your real opportunities lie. And you can eliminate this. This turns even more rock star. What if I could eliminate 40% of this list, but you still could keep all the deals that you had? It's that much better, right? And what we find too, guys, when you split your lists out like this is we started out as a probate list provider. probate leads. Okay. And even for our clients to this day, I know that we're one of the biggest probate lead providers for real estate investors, probably not across all verticals, but for real estate investors. I mean, because I have the ability to put boots on the ground. That's what we do. Quality is everything for us. So when we get a client who wants probate leads, we literally 80% of the time have to put boots on the ground to walk into the courthouse every single month to get those leads for people. Okay. But as a probate lead provider, do you want to know how many times people tell us our leads suck? And I'm like, I don't have anything to do with the lead. The lead can't suck because I didn't make it up. We went in, it's a probate lead. It is what it is. And you can't, there's no cleaner way to get it than how we get it. Okay. That said, probate, hands down, most lucrative lead out there, stands the test of time. That list is fire. But if you suck at converting probate leads, and there are people who do, you just have this block, right? Like you have to know what you can and can't handle. And some people just cannot handle talking. They don't want to talk to people that had just had a loved one die. They feel icky about it. And so they suck at converting it. So Lori, I could give you a probate list and you'd crush it. And Sally might get nothing from it. So you have to know sometimes, and when we're evaluating people's sales teams, we're looking at that stuff. We're going, listen, we're presenting you with the right amount of opportunities, but for whatever the reason, you guys are not converting the opportunities this way. So it tells you where you either A, need to make changes to the way that you handle the sales for that particular lead type. And can you imagine, you're going to handle a probate lead differently than you're going to handle an absentee or a fellow investor lead. The investors, I'm telling you right now, we know for a fact that having a more aggressive stance with them, having a get to the point quick, non-emotional stance is what converts the absentee lead best, because it's investors, it's people like us. It's like, tell me what the bottom line is. And really soft, warm, fuzzy salespeople tend to not convert those leads better, tend to convert those leads worse, but they convert financially distressed leads and probate leads like gangbusters, because they don't mind sitting around and, stroking people and, and it could be as simple as, hey, we're going to give our aggressive salesperson these leads and our non-aggressive salesperson these leads. Or if you're a one-man show, guys, trust yourself, believe yourself. If you just don't make yourself gut your way through stuff that you just don't like to do, don't want to handle. You can do anything, but you can't do everything. Trust yourself. Don't beat yourself up over not doing something well. Own it, understand it's not your thing, and focus on something that you can convert. Okay. You can do that elegantly, if you're studying data this way. So I want to add some value. I promise I'm almost done. I want to add a little bit of value for you guys. I just want to share with you guys some things that will help you, that we discover by studying data, some kind of global metrics, and just essentially what I'm going to do for the next 5 minutes or so is just tell you some of the places where we've identified are the biggest areas of missed opportunities for real estate investors. Okay. And then I want to, like I said, I want to give you guys some time to ask some questions, and you can ask pretty much anything you want. And we could talk about it. All right, let me go to this first. We just got done with another 3-year study of our clients' data. And this was really interesting, super interesting. Guys, we went back and studied all of our clients' deals, the ones that they actually, the deals that got closed. We're not talking about like, oh, we studied 100 deals. We're talking about thousands and thousands and thousands over the course of, I think we went back to the beginning of 2019. So like almost 3 years worth of data, okay? I suspected that this number was going to be compelling. I had no freaking idea it was going to be this compelling. And I want you to, if you take nothing else away from this, I want you to take it from here. Okay. We looked at the deals. 76% of the deals had the phone answered the first time the person called. Live answered. Okay. To this day, I still have clients that I cannot convince to answer their phones. They just convince themselves that if somebody's motivated enough, they're going to leave a message. I don't want to take the awful phone calls. These are all opt-outs, and I'm going to let people opt out before I talk to anybody. And okay, you can do whatever you want. you know, but I'm telling you right now, when you look at data, 76% of the deals that our clients closed happened when, I'm not saying they happened immediately, but I'm saying 76% of the time, somebody actually answered the phone the first time and had a conversation the first time. Okay. This is pretty consistent almost always. 60 to 70% of deals come in follow-up. Remember what I was talking about at the beginning? I'm telling you, when somebody is not ready to sell, do not throw those leads away. This is so compelling that if I cannot get people to do it, we'll do it for them. Like we'll just do it for them. So, you know, if you, at the end of the day, guys, we're not living in an environment anymore where you can waste anything. You have to find a way to monetize every single lead that comes into your system. Okay. And the way that you do that is to care. What's their pain? Who's your client? Because I think your clients are the sellers. You guys are making a lot of money off of these people, right? And do you care? Like, do you care about them? So if you can't help them and they don't fit your buy box, there's a way to still add value in those situations, add value to them, make money for you, right? So an example, and it doesn't always have to be a dollar thing, right? I'm an active investor, still am to this day. I'm absolutely an active investor. We, just because of the visibility that we have, we don't get kickback if I refer a retail lead. But what we do with our retail leads, because I'm not a broker, I don't have a real estate license, it's nothing. So we have a relationship with a realtor where if it doesn't fit the buy box, like we answer the phone, they don't answer the phone because we want to make sure that we, you know, get the opportunity. But if we give the lead to her within, I think it's like so many minutes, they commit to pulling 3 comps for us. They, you know, they do all this stuff that we predetermine. And then if it's not a deal, they get to list it. But we don't do any of that stuff. So it could be in a relationship. Like you can monetize the lead. The currency might be networking. It might be relationship or whatever, right? I have clients who will sell leads to contractors, you know, because sometimes somebody needs to sell a home, and what they really need is they just need their kitchen redone because it's falling apart, you know, and they won't come down far enough, but they would redo their kitchen, and there is potentially opportunity there. There's all kinds of ways if you care. Okay, there's 1,000 ways to skin the cat. What I'm saying is that you've got to look at every single time. If somebody's calling you and they're taking the time to call you, there's some pain there, you know, figure out how to monetize it by adding value, and caring about their pain. This is big, guys. This is really, really, really big. You can imagine, you know, based on how robust, you know, our marketing is, for our data clients, because we do marketing on a smaller level without all of the data study and stuff like that too. But obviously these metrics are coming from our really big clients, okay? And what we found out is that if we go back and study the deal, like study deals, and by the way, I hope you guys are doing that. Like study, if you go on an appointment and you don't get the deal, whatever you do, please make sure you research 6 months later what ended up happening with the deals that you lost. Who bought it? What did they buy it for? What did the house ultimately sell for? Who did it sell to? You can find the buyers who are buying at top dollar in your area, doing that kind of stuff. You can figure out that you are not properly evaluating the end value of things. Your ARV is too low, so you're getting bid out because you're not being aggressive enough. There's all kinds of things that you can find out for here. But here's what we found is that even of our good, amazing, experienced clients, on average, if they wholesaled a property, it was wholesaled a total of 2.2 times. What does that tell you? So what I'm saying is that they wholesaled it, and on average, if the deal was wholesaled, it was wholesaled again, plus some. Okay, that's a lot of meat on the bone, guys. That's being left. But if you would study your markets and this is where I'm just going to start to get excited, because we're in the middle of developing something that I wish was ready, but I'm going to tease you guys with this. If you would study your market, it will tell you when you're leaving meat on the bone. Okay. So you got to make sure that you're doing whatever you have to do to fully understand the opportunities that are in front of you. I mean, imagine, if you could even just like eke another 10% out of all of the deals that you're doing. I mean, that alone can be a life-changing amount of money for a lot of us. Seriously, that's what I freaking love about real estate. Like, but the good thing about real estate is that one deal can literally change everything, your entire life, in that moment, not forever, but, in the moment, it could change your entire life. The bad thing is one deal can take you down, it could take you down. It did me, by the way. I got into multifam way too aggressively back in the crash. And I went down hard, like fully personally and business bankruptcy. So anyway, it's just important. So our passion, clearly, and you know what, let me go back. I'm sorry. These are some general things that I'm going to really quickly go over. I've already talked about this. You've got it, guys. You got to pay attention to your business. Like you got to learn how to run an actual good business, and not just like, well, there's money in the account at the end of every month. You know what I mean? You got to get some biz dev stuff going, because mediocrity is poison. You need to do the data analytics, and you need to look at data. And I'm going to get what I'm going to share with you is micro market study, which we have not done. When we studied data up until, I want to say about 6 months ago, well, maybe right pre-COVID, we were looking at things on a county level and on a state level. So we were looking at markets and determining where emerging markets were or declining markets were. And that's part of what we use when we do data analytics for our clients. And incidentally, that's what we use to help them chase yield. So big clients, once they are in an area, then they'll go, well, if I can do this virtually, tell me where in the country I should go to help me determine where the emerging markets are in the country, so that I can just go chase yield all over the country, right? So that's part of what we did, but I'm going to share with you here in a little bit some of the micro market study that we have done that is really exciting for the everyday investor, okay? This is huge, and I heard Lori say something at the beginning, and y'all, RIAs, masterminds, collaboration. We are living in a moment where operating in a bubble is not only not smart, it's dangerous. We need each other. We need to be able to have these conversations. We need to talk to each other. We need to collaborate. What did you say? 75, 76% of people within your RIA have done business together. Guys, there's enough for everybody. We each need such an infinitesimally tiny piece of the pie to have a business that could be literally long-term life-changing for us. There doesn't need to be this scarcity mentality. There's enough for all of us. And it's even better when we work together, because I'm going to tell you right now, I've won by myself and I've won with other people. It's way more fun to win with other people. I'm telling you right now, I don't want to sit on an island by myself sipping a margarita. I want you sitting next to me. It's way more fun when you're sitting next to me and we're clinking glasses. And if that means that I have to take a little bit of a smaller piece, I don't care, because there's no amount of money that's worth me being miserable. And without winning with other people, and the joy of that and the accountability of that. For me, I like working with other people because it holds me accountable. I'll work harder, Jeffrey, for you than I will for myself. Like, I'll give up. But if I know I got Jeffrey, by my side, and I got something to prove, and I don't want to let him down, like, it's accountability for me. Like, I'm better working with other people because I'll show up harder because they're there. Whether it's to prove myself or because I want them to win, it doesn't really matter. If you know it, then, collaborate. I'm not pushing partnerships. That's a whole separate conversation that we're not even going to get into. I'm saying strategically collaborate with people, work together, help each other. I talked about this a little bit. Relationship marketing. Humanity is a lost art. Guys, want to know what happened in COVID or during COVID, and we're still not seeing the emergence yet? What do you think happened with bankruptcy leads and lease pendants leads and tax delinquent lists. What do you think happened to those lists that everybody was marketing to when COVID happened and all the moratoriums hit? Fell off the planet. Okay. So what did everybody stop doing to those lists? Stop marketing to them, right? Now, sometimes you have budgetary constraints. You have to do that, right? But what I'm suggesting is that ask a better question. Is that stuff stopping they stopped responding to those letters and postcards because their pain in the moment went away. Is it going away forever? No, it's coming. We don't know when it's coming, but it's coming. Their pain is coming, right? More than likely, their pain is coming. And what are you doing right now to earn the right to have a voice with those people? Or are you really just going to go, oh, screw you. I'm only gonna show up if you can do something for me. These people represent $20, $30, $40, $50,000. Do you care? Do you care about them? Like, if you are marketing now for the long tail, if you really care, like, what are you doing now to earn the right to have to be the primary voice that they're listening to when their pain hits? Okay, just think about that. And then we talked about solving problems, just making sure that you're monetizing every lead and that you're being respectful of every single opportunity that comes in front of you. Because I'm a very, very big believer in, you have to be able to be trusted with the small things for bigger things, right? Like, you can't keep asking for opportunity if you're being irresponsible with the opportunity that's in front of you. I think God just goes, I'm gonna just wait a second. I'm gonna let that tidal wave sit there for a second. They're not quite ready for it. I really do think that. All right, so our passion always, and I hope that I've expressed that to you, is making data accessible to every investor. And I know, so I'm so excited about this. I talked about micro market study, right? So we are really passionate about finding emerging markets and understanding when a market is emerging, when it's in a declining state. You can make money in both of those markets, right? I'm not suggesting that if you live in a state, take Michigan, or some of these markets that were just in the tank. That didn't mean that there wasn't opportunity there. What I'm saying is that it's important to know that the market is in decline. It might make you make a different decision about buying and holding in a particular market, but there are always going to be buyers. There's always opportunity. It just tells you, market study to me tells you a lot about where, in the past has told you a lot about where, like, what exit strategies should be executed. What does the pricing need to look like? Are you being realistic about your pricing? Are you being aggressive enough with your pricing? If you're an emerging market, that will give you an indication that, hey, maybe I need to look at the end number. Maybe I could be being more aggressive. And in an emerging market, and by an emerging market, guys, I'm talking about data that looks back over the course of history, years and years worth of history, and looks at appreciation, looks at days on market, looks at whether or not the likelihood that a property is going to appreciate in value. The reason why that kind of data is important is because it will let you, how many of us have said, every single one of us, I'm getting outbid. I can't compete with people who are outbidding me. And guess what those people are doing? I'm not saying some of them aren't making money, but they're making money. They're making money. How? Right? Because they're being way more aggressive. And you look at something sometimes and go, there is no freaking way. How many people said that about iBuyers? That used to tick me off when I was in masterminds 4 years ago, and they were like, these iBuyers, they're never going to last. They're overpaying for everything, and they're losing money hand over fist. And I was like, are you guys kidding me? They've already won. Like, are you seriously going to arrogantly sit as an individual and judge companies that have billions and billions and billions of dollars behind them? And you want to know what those iBuyers were doing during that time? Two things. They were changing people's mindset about buying, because now, what they essentially did is the Amazon flywheel, right? where they needed to change people's mindset and allow people to believe that you could actually buy a home virtually, buy and sell a home virtually. Nobody has to walk in, right? So that was part of the strategy, just like Amazon. Amazon lost money selling books for a really long time. And the real goal of Amazon back when they did it was I lived through that moment where you're like, I'm not going to put my credit card on the internet. That's terrifying. So they took something and they made it impossible for you to not say, well, I mean, what's the risk? It's a book, it's $5.99. Once they got Americans used to inputting their credit card information online, game over. But what they were really trying to do is just get people used to doing online transactions. Same thing with iBuyers. Second thing iBuyers were doing, and you see them doing it right now. Data, collecting, studying, figuring out how to buy. Once you have enough data, remember, everything becomes predictable. So now they can make these offers. They have enough data to just be able to go, yep, we can pay that for that. Yep, if this, then this. Yep, if the house looks like this and it's this buy box, we can pay this and we're going to be just fine, right? So the study of markets is really, really, really important. But up until this point, we've always thought, I mean, it doesn't really it serves the small investor on some degree, but I mean, it doesn't really matter if most investors work in a county or even 2 or 3 counties, right? Most investors, including me. I only work in my state, and my state only has 3 counties, and I only work in 2 of them, right? So it doesn't really help me to go, my county is, and Delaware has been in decline for the first time in like 7 years. Delaware is actually an emerging market, believe that or not. Delaware has been a declining market, and I've made plenty of money in it. Okay, I stopped holding property for a hot minute, but it didn't really serve me to know that the market was in decline. But not really, right? Here's what we found through COVID, and guys, this is so earth-shattering and groundbreaking that I'm so excited about it. The recovery from COVID, the entire economy. Okay, I don't know if any of you have ever heard this term, but we study markets, we study financial markets, we study all kinds of things. It's K-shaped. Has anybody ever heard that? The recovery from COVID on a global economic scale is K-shaped, and it's K-shaped to a degree that it has never been before in history. Okay, so what that means is that we have some, like, think about the top of the K. We have some things that are not just recovering, they're actually thriving. Think real estate. Real estate is not only recovered, real estate is at the highest point in the market than it's almost ever been, right? So real estate is at the top of the K. Then think about the bottom of the K. There are some industries that are just decimated. Think about like things like WeWork spaces, and there are some that did not recover at all. So it's not like a steady recovery of the entire economic, picture. It's K-shaped. Some economies are recovering, some are not. Then we were literally sitting around and I was like, what's really interesting is that that's true too, even of within specific industries. So think about restaurants, right? And if you look at restaurants, even within that industry, the recovery is very K-shaped. So there are some types of restaurants that are not only recovering, but thriving. There are other types of restaurants, think like buffets and Chinese food restaurants for real, that are completely decimated, bottom of the K, right? So what we said is, I wonder if the same is true of real estate. Okay, so we have never really focused on it. We've had access to the data, but we've never really focused before on, if I take a county, all right, what's a county in California? Any county.
Santa Clara.
Okay, if I take Santa Clara, okay, I can look at that market, and I don't know off the top of my head, but I can look and see if that particular county is in an emerging state or a declining state, right? I can look at it and just say, hey, is our homes selling at what's the rate at which homes are selling, and is the value appreciating or is it depreciating? Okay, and I can give you that answer, right? But what if we broke it down on a micro level, just like we did with restaurants? And we said, okay, but what if we looked at zip codes in Santa Clara? if Santa Clara is emerging, okay, and it's very clearly emerging, then the assumption is all of Santa Clara is clearly emerging, and that's not true. In almost every sense, I'm not saying they're not outliers, but in almost every instance, when a market is both either in appreciation or decline, there's 50%, there's a segment of that market that's appreciating, and there's a segment that's declining based on the zip codes. So there are zip codes that are in decline, and there are zip codes that are in emerge. Super interesting, right? But how does that apply? Like, how do we apply that to marketing, right? And what does that mean? Okay, so what we were looking at, and I was like, here, the problem is, I suspect that the distressed, motivated home sellers in a county likely are going to be found in that declining market. Doesn't that make sense? Like, intuitively, you would go, you know, like if they're in a zip code that's emerging and in a wealth building phase, if you will, then of course, why would they be a distressed home seller? Why would they sell at a discount? It's very clear, you know, that there's tons of opportunity out there. So we looked at that and we were like, okay, but it would still be good to know where where most of the distressed home sellers are coming from. Still be good information to have. Y'all, again, excluding some outliers, okay, what we found is that for the most part, distressed home sellers, okay, are following the emerging markets, not the declining markets. At the very least, what we can tell you, especially if you have data, if you have old sales data, you can literally take that micro market. If you look at the micro market, you could just identify even for yourself where your opportunities were presenting themselves. If I can separate out your entire county by zip code, we can literally fill in the blanks with the actual data that you have. So let me first say, on a global level, for the most part, distressed home sellers are following the emerging markets. So if I can take Santa Clara and I can say, here's your emerging zip codes, here's your zip codes that are in decline, you could literally cut your marketing budget in half. Because why wouldn't you chase the distressed home sellers? Because not only do you want to chase the opportunity, but now we're telling you that the opportunity is actually where it's safest, because you're safest in an emerging market because you have so many different strategic opportunities there. You could wholesale it, you could flip it, right? So if you're trying to decide, for example, between wholesaling and flipping, if I were you and you were and you wanted to market to the declining, then pick wholesaling because you're in and out fast. You're going to sell it. You're going to make a ton of money, but I might caution you, right, on doing a flip that's going to last 7, 8, 9 months. I'm not saying don't do it. I'm just saying it gives you a little bit more insight as to, like, if you're on the fence about making something, if you have that micro market data, it can help be a deciding factor, right? Now think about this. If you're a buy and hold person, and I think you should be, because for the first time that I've ever known, like it cracks me up that people, when people are still using the old models to determine what they're going to pay, 65, 70% models, 65% minus repairs. The reason why you had to buy that low, especially if you were buying and holding, is the instability of the financing, of your financing. Because up until this point, it's very, like, after you take the Fannie Mae, Freddie Mac out of it, you can't get long-term fixed financing on rental properties until now. Those products are out there now. Long-term fixed financing is now available on rental properties, individual rental properties, guys. That money's out there. It's cheap and it's stable. So it allows you to buy without the risk that we used to have. But I went bankrupt over that risk, that 5-year call. And banks do it all the time strategically for absolutely no reason. Nope, we're calling the loans. Nope, we're taking these back. Nope, we don't want it. And then you get stuck. What are you going to do? You know? So it allows you to also look, if you're making a decision about buying and holding, again, if you have that micro market data, you might be way more inclined to go, okay, if this is an emerging market, the likelihood that not only if I can get this thing to cash flow or break even, the likelihood that it's going to appreciate, it gives you that level of predictability instead of guessing and hoping that it's going to appreciate. Because we all know what could happen. I don't ever suggest you buying something based solely on appreciation. but it sure would be nice to know if the likelihood is that it's going to appreciate, and then you can, have that stability there. Does that make sense? So here's what's really exciting. We have kind of joined forces with we've always used this data with another with a kind of more like a strategic partnership. We've used it for our bigger data clients, but once we realized that this data could be used at a micro level and should be a tool that every single investor has in their toolbox. I mean, like knowing what we know now, having the ability to study your individual market on that micro level, but with a click of a button, you don't have to do anything. Like we're talking about just market study here. So this is all data and information that we already have access to. And what we're creating right now, and we will have within probably another 2 to 3 weeks, is something that we can literally hand to you that will say, if you want to look at a specific market anywhere in the nation, we can give you the market study data that you need that will give you the additional insight that you need. It could say, and I'm not saying use it to niche down your marketing. I'm saying this is just one more tool that helps you make, and there's 1,000 other ways that you could use that information that we're giving you, 1,000 other ways. Those are just some of the ways that I see that you could use it that could immediately make a difference in what you're spending or what you're making on your deals. It'll show you when you can be a little bit more aggressive on your buy. If you're in an emerging market, hey, I got to make a decision about whether I'm going to go up another 5K. This isn't a declining market. I probably don't, I might not, I'm already uncomfortable where I am, might not want to push this one, or no, let's go. I could do it. You know what I mean? And I'm not telling you that this is like a magic thing. You still have to think and apply things and be strategic about what you're doing. But I wish to goodness, I told Lori, I said, I'm heartbroken that I'm really not ready. I just don't, we're just not, it's a SaaS platform. It's a tech product. So we're not ready, but I did tell Lori, I don't even know what I'm going to do, but I told Lori, I said, if you'll let me talk about it, and if people are interested in learning more about it and seeing it and figuring out the ways that if you had a tool like this, that you could use it to dip your toe in the water on data, I'll figure out something special to do for you guys. This is legit. I promise you, it's the first time I'm talking about it. It's the first time I'm talking about it. And I was like, Lori, like, I want to talk about it. Can I talk about it even though I'm not ready? So I'll do something real special for you guys. I promise. Like I'll figure something out. I'll figure something out special to do for you guys. But if you're interested in finding out about that, make sure that you reach out to Lori. She is going to set up, a little bit of maybe an hour call or whatever, where I can actually show you the dashboard, show you exactly how you could use it, and show you how you can get access to it. If that's something that you're interested in, just let her know. That's all you need to do. Just let her know. I'll come back and we could talk about that and data and all the things. But to kind of bring this full circle, guys, I've kind of said this, but I really want to end on this note. And then if we even have time, I haven't been watching the time. If we even have time, I'm happy to stay as long as anybody has any questions. I'm actually, surprisingly, I just turned 47 and I'm surprisingly alert as we approach the midnight hour. Maybe it's my water that I have here. We'll call this water. Guys, who's been entrusted to you? Who are you supposed to be caring about? I don't care, like if it's in your personal life, if it's in your business, who's been entrusted to you? What's their pain? And do you care? Because you should. You're making a lot of money off of people and you should care. I'm not trying to make you feel bad about it. I am all about eking out every dollar you can. But I also believe with everything inside of me that you have to be willing to add value back for what you're extracting. You have to earn the right to show up. And you do that, by asking questions. And then if you're asking questions, constantly ask yourself, what's an even better question? Because all of us could sit here and look at just any one of these questions and for another 30 minutes ask better questions and even better questions, right? But it's a discipline. You have to do it. You have to ask, and then you have to keep asking until you've answered all the, answered all the questions. All right. That's it for me. I'm ready to answer any questions that you guys might have, and or talk about whatever you guys want to talk about.
That was amazing, Christina. Thank you.
Yes.
And before we get into the questions, Jeff put a link for you all out in the chat. So if you want to learn more about Christina's Data for Everybody program when it's released, get on the wait list. It doesn't cost you anything. It's out there at sjrei.org/data. And as soon as we hear from Christina, we'll set up an opportunity to invite you so that you can learn how you can get into the micro market data and just crush what you're doing. I'm excited about it because, we're doing so much global marketing right now. I look forward to, getting more accurate data.
Yeah.
So that we can take all the dollars we're spending on the global and like laser focus in.
Absolutely. And then there's even if you're making money, again, be better, be excellent. If you can, just get really, really good at what you're doing. And guys, it's addictive, man. It's addictive. Once you see it, and then you see how much better you can be. And then you get the feeling when you start demanding excellence from yourself all the time, the impact that the snowball effect and the impact of that just is, it blows my mind. It absolutely blows my mind. And it applies to everything. It applies to businesses and marketing and health and relationships and all of the things. It's really freaking cool.
It is cool. All right. So Jeff, you want to take questions?
I'm open for questions. I have a question, Christina. So can you hear me okay?
Yeah,
so
and you know what? I'm gonna stop share if you guys don't mind, because there's nothing more to see. And
will the new platform be tied into your direct marketing somehow?
Ooh, you want to know why we're not ready? Because at first we were gonna just put the thing out there, and I said, you know what we really need to do, because we have a marketing hub where people can go and order leads and do direct mail, and we'll even handle the direct mail, even outside of data study. It's a whole lot cheaper if we're not doing the data study. What we're doing with that platform is, imagine if you could see all of the zip codes and you could look at the emerging markets. We're building in the ability for you to click on it and order leads where you want. And filter them, filter them the way that you want to filter them. If you want, absentee leads, if you want financially distressed leads, if you want stacked leads, what we're building is the ability. And again, we're following the pain, right? How do you make marketing easier? So if you're going to use this from a marketing perspective, and we already offer the service of the lead, what we're building right now as we speak, and it's why we're not ready, is the ability to just literally order and mail if you want, because we do done for you mail for our clients without data study. So you can pull the list and we'll actually mail it for you. We could do letters. I'm up to 53 people who physically handwrite addresses on envelopes for clients. Yeah, I mean, we do it on a really big level, and oftentimes you could do it through us cheaper just because of the volume of we represent millions of pieces of mail. And so we can oftentimes, especially if you're a smaller investor and mailing a smaller quantity, we can actually do it cheaper for you than you could do it yourself. And we can do it if you want us to.
Will the new platform be primarily mailing postcards, letters,
whatever you want,
standard or premium, whichever you want, right?
Yep. It's going to be your choice. You can skip trace it. You could do whatever you want right from that. If you want to use that platform that way. You don't have to. It's just we want to build the option in. If you choose to use that micro market study, and by the way, we're going to have the big global markets as well. I just see the micro market as kind of fire for the typical investor, even an investor like me. I really didn't use the market study stuff as an individual investor, but you could believe the heck I've been using it ever since we figured out what happened, with the micro markets after COVID.
I got a couple responses
okay.
From calls that I had. I thought about it when you were telling me about the letters, but I got a couple of responses where it was from absentee owners,
Yep.
and there were two, right? And one of them, she said, you've got my property listed on the postcard, right? And I really I don't like that. So she had privacy concerns, right?
Yep.
And I thought, well, that's a benefit of the letters, is that you can have more private kind of conversation with people who receive the letters, right? But
Sure.
that might be something that that's a benefit, right?
Absolutely. Absolutely. And by the way, guys, just because everybody always wants to know what's the hottest lead, right? Everybody wants to know that. There's way better questions to ask, okay? But I'm still going to give you the answer. Hands down right now, absentee leads are the highest performing leads. You're going to want to add some filters and things like that on it. But, landlords, people who are tired and, like landlords are exiting, even if they're not tired, just because of the opportunity. I mean, I literally have clients who are unloading their portfolios just because they can sell so high. They're intentionally 1031 exchanging and buying new stuff, right? They have a method to their madness. But right now, absentee leads are the hottest lead. I'm not saying the other ones aren't performing, and I'm not saying to stop mailing the other ones. Everybody just always wants to know what's the highest performing lead.
Will your new platform be tied into your Salesforce? You have
the call floor.
The call floor.
Yeah, the call floor is actually a completely separate thing that's done through our VA company. What's really interesting about the call floor is that we do not hire ourselves out. That call floor, we designed it. And we're not ready to launch this to just everybody. We're only doing it with our clients, but we're getting set to launch this nationally now that we've proven out the model. But our call floor is reserved for people who are not able to answer their phones or won't answer their phones, okay? And we actually answer the phones for free. But what we say is, they're gonna make more money. Client's gonna make more money because this is somebody who either can't answer the phone for themselves or won't answer the phone for themselves, okay? But just so that you know, what we tell them is, you gotta give us your buy box. You can listen to every single call. We are not gonna poach, ever. We're not gonna take opportunity away from you, okay? But you gotta give us your buy box. And if it doesn't fit your buy box and you don't want the lead, then we're taking the lead. And we make our money by because, and to be fair, we have a massive network. I mean, I can get rid of anything. If you have a reasonable expectation on price at all, it's why the multifam with the done for you asset alternative asset marketing that we're doing, we require that if you're going to have exclusivity in a territory with us, you have to market to every single 5+ unit in the territory that you lock out, whether you want 5 unit or 100 unit. You have to market to every bit of it, because we know, I know, and between Bratz and I, and even just in my own network, why wouldn't you do that? Like, if you don't want the 8, I literally have a client, I promise you, just did this, put a 8-unit building under contract and wholesaled it for 6 figures. You can sell anything right now. So, there's not that many multifam 5+ units. So the marketing that we do, we're like, you got to take all of it. And that's what I'm preaching right now. Like, take advantage of everything that's out there. Just wholesale it. Anybody else? Should I look in the chat? I didn't even think to look there.
Tell us a little bit about, so everybody on this call that's hearing about the platform, so these would be in software, they'd be early adopters, right? So tell us a little bit about onboarding, coming onto the platform, if you have data about that.
It is. Oh, are you talking about the data, the marketing that we do? Or are you talking about the micro market study?
The new platform.
No, that is literally, you're not gonna have to do anything. It's all there. It's just information. So you can literally study your own market, and all of that data is already there. It doesn't tie in at all to your sales. This is just the real estate market information. So this has nothing to do with, what we're just finding out is that you can use it, to make you better at your marketing. But what you would be actually getting access to is just straight up real estate market study. Like, what is the entire market doing? Anybody else have any other questions before I go have another drink? No. I promise, you guys have seen me. I have not been drinking this call. I'm totally kidding. But I would have done it had I thought about it.
Yeah, right?
I'm not apologizing. I'm saying I really wish that I had brought a drink.
Well, this was awesome. Spectacular information. I really appreciate you joining us tonight.
You bet. Anytime. I love it. I absolutely love it. And thank you guys for staying and listening to what could be boring talk. I know it can be. But there's just so many ways to apply it. And I'm excited to come back and share that with you guys. And we could talk about, like I said, I'm not going to make you look at that stuff the whole time. I'm going to be talking about, okay, here's how you can use it here. Here's how you can use it here. If you have your sales here, here's the different ways that you can apply it. So it'll be interesting.
Yeah, I think it's going to be awesome because, I think it can help the real estate agents. I think it's definitely going to help the investors, the landlords, everybody to just kind of see all that data. So
yeah, 100%. And it is literally going to be that easy. You don't have to do anything. You don't have to input anything. It has nothing to do with you individually, your individual data. It has to do with just the global real estate market, which not enough of us, including myself now, it's becoming apparent to me, have paid enough attention to. Again, you just got to keep asking better questions. Yeah.
That's it.
All right, guys.
Well, I'm going to wrap it. Thank you, everybody. And we will see you in a couple weeks with Zach. He's going to talk about wholesaling. And then we're going to come back around with Christina and get all those leads.
Yeah, make sure you come and see Zach. I love him to death. He's incredible. Guys, make sure you come and see Zach. He's just he's a great human being, but he's just really, really good at what he does.
He's a rock star.
Yep. All right, guys. Have a good night.
Thank you.
Bye.